Welcome back. I'm now joined by the rest of the TCS top management, V. Ramakrishnan, the CFO, Ajoy Mukherjee, EVP and HR head, and K. Kritivasan, President of the Banking, Financial Services and Insurance sector of TCS. Good morning, gentlemen. Thank you very much for joining in. Ramki, let me start with you. I was reading one of the brokerage notes and they said despite growth being strong, the operational leverage or efficiencies that you could eke out was only to the tune of about 30 basis points. How would you respond to that with respect to market?
In fact, if you look at it, last quarter we had about 70 basis points. So I think it's a continuation of a journey, right? So you will have in one quarter higher and lower, but the fact is that it's a continuing program. So 30 is not small.
Okay.
For our size of operations.
Okay. In the past, TCS has also enjoyed margins to the tune of 30%. Now we've got a phenomenal rupee depreciation that should provide a big tailwind. So if not going back to 30%, at least should we go towards the top end of your margin band? See,
we will continue to stay focused. See, we've been, this of 26 to 28 is what we said, this is our preferred range. And for the last some time, we have not been in that. So now that we have come into it, so let's wait for a while. But the focus is clearly on making sure that we maximize whatever are the opportunities and to stay focused on that.
Kriti, NGS said that he wouldn't go as far out to say that we could see a double-digit growth in BFSI into FY19. Give us some insight into FY20.
See, we expect the overall demand environment is good, and our customers are utilizing our Business 4.0 transformation framework a lot. And as I'm sure NGS would have explained, our growth is also very broad-based, like across all geographies, across all industry sub-verticals, we are seeing growth. So instead of commenting whether we would be double-digit or not, I would say it's a very positive momentum we are on. The trajectory is good.
So it should continue to accelerate. You don't expect momentum to sustain, you expect it to accelerate.
See, the current growth rate at least you would be happy to maintain. That's the way I would put it. Accelerate, I don't know which way you understand, but we are quite happy with the momentum we are on.
Okay. Ajoy, you've added 10,200 employees this time. This is the highest that we've seen in the last 12 quarters.
Right.
Is that on account of a stronger demand? And can you continue to add close to 10,000 employees every quarter and maintain attrition at 10.9%?
See, our goal is that, yes, I would love to have attrition lower so that I can retain people, so that once people come in, we are giving enough opportunity for them to grow. And that has been our stated kind of philosophy, that we try to hire people so that they make a long-term career in TCS. And we do not believe in hiring, firing kind of a model. Now, the question of the 10,000 addition, yes, it's in the last 12 quarters, this is the highest. And that is primarily to fuel because of the growth that we are seeing, and the current growth as well as what we see in the future. So it is to take care of that growth. At the same time, we have also talked about machine first delivery, right? So it's the interplay of the machine as well as the humans. So both put together, that's the interplay that happens. And as a result, we are going to hire. But whether it will be 10,000 every quarter or not, that will be difficult. But at the same time, our hiring will be much more robust than last year. This first half, we have done 16,000 net compared to 7,700 in the whole year. So hiring is going to be pretty strong.
Okay.
Okay, hiring is going to be pretty strong. That's very positive. We will get to the rest of that conversation in just a bit. We've had about 20 minutes of conversation with the TCS top brass. Enough for analysts to make up their minds. Sandeep Agarwal, research analyst at Edelweiss, joins us on the phone line. Sandeep, you probably were in the analyst call and you heard the top brass speaking to Rima as well. What's your sense? Are you getting a sense that going forward they will be able to build on this 26%, they'll be able to build on this 10% revenue growth?
So see, Lata, I look at the result in this way. See, there is a slight miss on constant currency in the quarter, 20, 30 bits, whatever number it is. But on the rupee front and dollar front, there is a beat. The thing is that till now they have never guided anything for the future. First time they are saying double digit, they are very confident, which implies that the next 2 quarters will be a 2.5% kind of CQGR, which is after a long time, because generally TCS has a weak second half. So I think this commentary gives much more reassurance that the demand has definitely improved significantly. Also the order book, the new client addition, and a 10,000 people addition, which is a record number after 3 years, All these things suggest clearly one thing, that momentum is back and they are winning a lot of deals and the industry itself has turned around.
Okay.
Now, for a quarterly 20 bips miss, I don't know how the stock should react, but otherwise things are looking really good for me.
Okay. Sandeep, good morning. Now, so that was my next question. How do you think the stock is positioned? Because it's not cheap, but from the all-time highs, it's corrected quite a bit.
So see, from an expensive perspective, it still is very expensive because it is 45% kind of premium to the other stocks. But so is the market. It is the market leader. The cash distribution is high, and now I think with double-digit growth reassurance, it means that there is much more certainty of 2.5% growth in the next 2 quarters, which I don't think anyone was confident before this call, before this management call, because they never guide what they will do, and generally the second half has been weak because of less number of days and furloughs and all that. But I think with this reassurance, we should see it as a much more positive statement rather than, looking at a short-term 20 basis point miss. That is the way I would put.
Okay, so the positive statements that have come in. Also on BFSI, the growth was very strong this time, 3.5%. And the management also said that the momentum continues for BFSI, although it may be too early to call for double-digit growth there. Based on all of these statements, would you raise your earnings forecast, your EPS estimates for TCS, and what would your target price be now?
So see, we have increased our EPS by 8%, primarily to factor in the currency and operational efficiency. And our target price is now 2100. We value the company at 22 times. So although at 2100 you don't see a much upside from yesterday's closing, but I think from a longer term perspective, other than it being expensive, everything is good. Execution is good, turnaround is good, deal pipeline is good, employee addition is good, and we are doing all the right things. So I think slight expensive. So I would recommend that if it falls 4-5% sometime and it comes in the range of 1850 types, then it is a good buy, I would say.
Okay, and the result doesn't make you change your view of the other IT stocks?
No, there is no change in view. I think it reassures that there is a big turnaround in the sector.
Okay, all right. Thanks, Sandeep, for joining us. Well, that's the word coming in from Edelweiss. They like the numbers. They have a target price of 2100 on TCS. And in fact, they've raised the EPS estimates by 8% on the back of positive commentary from the management and the good set of numbers, especially in BFSI and retail.